Imagine waking up one morning to find that your bank account has been frozen. A portion of your hard-earned saving has been seized to bail out the very institutions that were supposed to protect it. This is not a hypothetical scenario from a distant financial crisis. Bank bail-ins are already law in many countries, and experts warn they could strike again. In today's video, we will reveal the most effective assets to safeguard your financial future: physical gold and silver, strategic cash holdings, Bitcoin and select cryptocurrencies, and even diversified exposures into the S&P 500. Look at this $100. If you took this exact bill in 1976 and tucked it safely under your mattress, you would still have $100 today. But you don't have $100 worth of purchasing power. Over the last 50 years, the rules of the system quietly melted your money away. In addition to losing our money to inflation, we are now under the threat of a bank bail-in, which was brought about in 2010 with the Dodd-Frank Act. There are a few bank bail-ins that actually has happened in 2013, Cyprus; 2014, Portugal; 2015, Italy; 2017, Spain. This doesn't mean that depositors lost all their money, but many instances they lost some of their money. That same $100 bill that you stuffed under your mattress in 1976, in 1976 prices will buy you about $18 worth of goods. But if you had placed that exact same $100 into the world's most productive businesses, the S&P 500, it wouldn't be $18. It'd be worth over $22,000 today. So this is a part 2 on the video about bank bail-ins. In the last video, we talked about why traditional banking systems are cracking. Today, we look at reality. Most people are playing a financial game where the rules are mathematically designed to make them lose. If you keep your wealth purely in a standard bank account, you're, for one, bleeding out. For two, you're at risk of a bank bail-in. Today, step 1 of our productive framework, we address the financial life raft: assets positioned entirely outside the banking system, physical precious metals, and cash. Why is this step essential? During the bail-in scenario, bank deposits, particularly those exceeding insurance limits, can be frozen, converted, or subject to haircuts to stabilize the institution. The 2013 Cyprus crisis provided a clear precedent. Uninsured deposits face significant losses, with portions converted to equity or written down. Even insured deposits may experience temporary access restrictions during resolutions. Physical gold and silver serve as a reliable life raft because they exist as tangible assets independent of any financial intermediary. They carry no counterparty risk, meaning their value does not depend on the sovereignty of a bank or custodian. Unlike digital entries in a ledger, physical metals cannot be electronically frozen, reprogrammed, or seized through a simple system command. They have functioned as stores of value across centuries of monetary turmoil, inflation, and systemic resets. Cash held in small, accessible denominations outside major banking channels provide immediate liquidity for essential transactions when electronic system fails or ATMs face limitations. Together, these assets create a buffer that maintains purchasing power and operational flexibility precisely when the broader financial infrastructure is under stress. Implementation requires care. Acquire physical metals, coins or bars, from reputable dealers, ensuring they are allocated and fully owned by you. Prioritize secure private storage options such as home safes or special non-bank vaults. Avoid arrangements that reintroduce counterparty exposure. For cash, maintain reasonable amounts sufficient for several weeks of necessities while remaining mindful of reporting requirements and security considerations. This is not about predicting imminent collapse, but about prudent diversification. By allocating a portion of your wealth to physical metals and cash, you establish independence from the vulnerabilities inherited in fractional reserve banking. In the next segment, we will build upon this foundation with additional layers of protection. Don't forget to like this video and subscribe to my channel. It really helps the algorithm. The Life Raft protects you locally. But what happens if you need to move or if you want to set up life elsewhere? You really can't board a flight with 50 pounds of gold and silver, but you can take Bitcoin. And you need to have that self-custody. This is your escape hatch. The banks cannot confiscate your Bitcoin. The government, I kind of think maybe they're working on it. Bitcoin is borderless, permissionless asset. It doesn't care about geographic boundaries, and it doesn't require a bank's manager permission to move. If you hold your wealth correctly, you can walk across any border in the world with nothing but a seed phrase memorized in your head, and your wealth is waiting for you on the other side. But here's where most beginners make a catastrophic mistake. They buy crypto on a centralized exchange like Coinbase or Binance, and they leave it there. Hear me clearly. If your assets are sitting on an exchange, you do not own them. You own an IOU. If that exchange freezes accounts, goes bankrupt, or gets pressured by a government, your money could vanish. The true protection here requires self-custody. You must move your assets onto a hardware wallet where you hold the private keys. It takes 10 minutes to learn, but it shifts you from a victim of the system to your own sovereign central bank. Now let's look at the third piece. Gold protects your wealth. Crypto is portable. To beat inflation over a lifetime, you need an engine, and that engine is historically the S&P 500 and productive assets. Let's refer back to our opening comparison. Hiding all your money under a mattress or purely in physical assets mean you miss out on human ingenuity. The S&P 500 represents the 500 largest, most profitable companies in the United States. These companies employ the smartest minds, build the best technology, and adapt to inflation by raising their prices. True intentional living isn't about hiding in a bunker with a pile of canned food and silver coins hoping the world ends. That's a defensive trap. If you only play defense, you will outlive your money. You have to stay invested in the productive output of the world so your wealth can compound faster than the government can print money. This is the core of the intentional approach. I use this stock market engine to fuel my freedom. I let the global economy do the heavy lifting so that I can afford to buy land, simplify my life, and build a homestead elsewhere. You can use the system's strength to fund your exit from it. To wrap it all up, look at your finances as a three-part strategy. You need a life raft of metals and cash for immediate local survival. You need the escape hatch of self-custodied crypto for international portability, not to mention the gains that are possible through it. And you need the engine of the S&P 500 to keep your wealth growing. I don't structure my life this way out of fear. I do it for freedom. I do it so no matter what policy a politician passes or what happens to a regional bank, my family has the freedom to choose where we live, how we spend our days, and how we protect our future. Building an intentional future takes time. You don't have to fix everything today, but you do have to start. I want to ask you, looking at these three steps, survival, portability, or growth, which of these areas do you personally feel the least prepared right now? Let me know in the comments below. I read them all, and your feedback directly decides what we break down in future videos. If you missed the first part of bank bail-ins versus bank bailouts, you can see that here. Don't forget to hit the like button if this gave you some clarity. Subscribe and follow the journey, and I'll see you in the next video.